Great. Yeah, and maybe let me just do a quick intro and then we take it from where. Let me know when you can see my screen.
Yes, we can.
Great. Yeah, hello everyone. Great to have you for our DueDash Bengaluru session. Soon, Deepmala will introduce our speakers and also what we're going to talk about. But before we do, I just want to give you a very brief introduction, not taking long, on what DueDash is about. So we started DueDash because there's one big challenge that startups and entrepreneurs face, which is the access to capital investors. Less than 1% of startups ever raise any funding. And of course, you can imagine if you're not able to raise the funding, you will have an issue. Actually, 4 out of 10 startups failed because of missing runway. Now we are solving this problem with our upcoming investability platform. On this platform, we will guide you through the whole investment process, from really knowing which data and documents you need. We guide you through finding the right investors. We usually say smart money instead of dump money. Also making sure that you can share documents securely, do your investor updates, and so go through the whole process. For the first 2,500 teams, you can get free access for the first half year. So just go on DueDash.com and you can sign up for beta list. We are also supported by many partners who help us also enable to create more impact for you. The ones below also offer different startup credits. If you're interested, just write me in the chat. I'm happy to share on that. Yeah, and with that, just saying that if you have more questions, let me know. And I would give it to Deepmala to introduce our speakers and go to the session.
Thank you, Michael. First of all, again, welcome everyone to this event. I'm very happy to host you all and waiting for a few more to join, but we will start anyways. So today we have 2 of our great speakers who are pretty much related to the investment industry, who are going to enlighten us about a few basic topics of investment, but very important for all the startup founders and the startup ecosystem. If you want investments, you need to understand the investors. And this is what we all have been struggling, the startup founders, I mean. And this session is one of the most important session to understand the basic mentality of the investors, which is required for a startup founder to prepare for their pitch before approaching the investors. And we have curated a lot of questions we got from startups and founders that generally early stage startup founders face. And there are no correct or wrong answers to this, but we have 2 of our guest speakers to address most of the questions. First of all, I would like to introduce Mr. Samir, and he's here with us. We have Samir and Shrey. Mr. Samir is an individual, completely passionate, focused, and goal-oriented personality. He believes in the principles of entrepreneurship, is well diversified in the fields of law, finance, and investment banking, and has provided sage guidance, actionable insights, and steered many of the startups through successful fundraising from highly reputed firms. So I welcome you, Samir, to DueDash webinar today, which is called Investor Saloon.
Thank you so much, Deepmala. Totally excited to be invited by this platform, and looking to contribute and add a lot of value to people who are here. Hopefully to achieve our goal today.
Okay. We also have Mr. Shrey, who is a CFA charter holder, value investor, and management consultant. He comes with a decade of rich experience spanning across long-term investing, startup mentoring, starting and managing fuel retailing business, strategy consulting, and nurturing talent. He has played an instrumental role at a fintech startup that has scaled rapidly in the span of last 6 years by developing its talent and leadership pipeline. So I welcome you, Shrey, to this event today.
Thank you, Deepmala. Excited to be here. Happy to contribute.
Okay. Well, I request the audience to keep on putting your questions, and I'll take them at the end once we address basic questions, which we have already curated. And if any of your questions are already getting answered in that, we would not take up those questions. My first question is to Mr. Samir. What should be your mindset as a startup founder while approaching or pitching to an investor?
Wow, an amazing question, Deepmala, to start off with. Right. So again, when you are a startup, first thing first, the exciting part of being a startup is it's an entrepreneur journey, right? As you are needed by the as much you need the investment, the investor also needs people like the startup, right? So it's not an underdog being part of you. It's not an underdog feeling when you are raising a capital, right? Okay. So first thing first, again, be confident about what you're doing, what the solution are you looking at solving at, and that is the very strong mindset to go in, because a lot of times when we see an aura around the fundraise happening, the big guns, and the unicorn club getting fatter and fatter by day, and you feel that pressure. No worries, you have a unique startup, unique idea that no one else is having, right? And you're solving a unique problem. That is so much important that only 3% of the world population is having. So cheer yourself, go with a positive mindset, and you have so one more important thing that you need to do is, it's a journey, okay? And success is always a journey. It's not about it's a destination, it's a journey. So when you are in a journey, listen, learn, change, adapt. These are some of the most important things as a startup that I think to start your journey along with. Thank you so much.
Great. So anything that you'd like to add, Shrey, into it?
I think Samir's answer was comprehensive. I would just want to add one more thing. When you are partnering with an investor, like Samir said, the investor needs you as much as you need the investor. You should have the approach that you are incorporating a partner in your business, and that partner is going to be a sleeping partner, and have the perspective that you're going to be as transparent as possible with the investor. And when you have that intent, that clarity, and you look for a symbiotic relationship, that is when a startup would flourish. That is the mindset I would suggest any startup founder to have. So that would be my 2 cents to it.
Thank you. My next question to you, Shrey, would be, when should a startup be considering raising capital? At what point? Because I'm myself a startup founder, and I was in a scenario or a stage that, is this the right time, or shall I wait for revenue to be generating, or shall I wait for more traction, or am I too late? I should approach, and because I know it's a time-taking process. So what would be the right time to consider raising capital?
Fair enough. That's a very crucial question. So I would like to ask the audience a question. If you're sitting on a gold mine that you own, would you want to sell it? You can give your answers in the chat function. Would you want to sell partial interest in it? If it was all money minting? Depends on how much I make. That's interesting.
Depends on how much I make.
I can make. That's really interesting. Anybody else? No.
No,
right.
Someone said no.
Yes, Venkat said no. So ideally, to be speaking, now in an ideal world where your business is all profitable and you have all the capital in the world, you wouldn't want to part even with a partial interest in your business. But like Yogi Berra says that, in theory, there's no difference between practice and theory, but in practice there is. And hence we live in a world where we are constrained by resources, and our ideas can be resource intensive. Now that resource, a lot of resource, most of the resources can be acquired when you have capital on your side. And that's why you need capital to raise. I mean, that's the very reason that you need capital in the first place. Now, when it comes to capital raising, the next best scenario would be to raise capital when on your own terms, which is when you are profitable, when you are in a dominating position, when you have a sustainable competitive advantage. That is when, and the markets are right. So if you're talking about, even if you're talking about the private markets, the markets are right. If the markets are right, that is when you can raise capital at a lucrative rate for yourself. Now, that also does not happen for a lot of people. So we come to the next best scenario, which is, okay, now I am somewhere in between starting up and somewhere not profitable and not having that sustainable competitive advantage. So what do I do? Now, my answer here would be that you reach a position capture even a small portion of the market in a manner that you have dominance over that very niche, and you have built certain structures, you have the documentations in place, you have the basic structure in place. One, on the supply side, you have the basic structure in place. On the demand side, you've got a small piece of the market where you are the dominant player. And once you have that and you have all the paperwork, that is when you should go raise capital. Now, like Michael said in the beginning, that uh, that when you're raising capital, there's smart money and there is foolish money. So similarly, there is patient money and there is impatient money. You would want to raise capital from the right people. It's really important that you raise capital from people who would stick with you, and hence it's really important that you do it. You have your basic framework ready, which is on the supply side as well as the demand side, and then you approach the investors. I think that would be a wiser course of action. Samir, if you want to add something, feel free to.
No, absolutely. Shrey, I think you've actually nailed it. So how do you see, just a few things that just to add it. It's like you have a board and a piece of puzzle. The small part is capital. We've seen people who have raised capital and companies have not done well. And it's so yeah, there's a lot of noise around raising the capital. Okay. But as a founder, what your focus should be around is your business. There are a lot of times that the business fundraise it takes its own time. Can you hold on to your nerves to it? That's where the testing time comes in. And what Shrey has put in is absolutely brilliant. I would not say, I second all his thoughts that he's mentioned.
Thank you so much.
Sorry,
for that.
my connection got disconnected. I'm back.
Deepmala, I would just like to add one more point to what I just said. So apart from what I said, what I would want to add is when you're raising capital, it's really important that you have a clear idea as to how you're going to deploy capital. Okay. Now Samir will tell you more in detail that without that idea, nobody is going to give you a penny. Okay. But sometimes in euphoric markets, you can get pennies, not just pennies, you can get a lot of money. But then you might get the funds. If you don't have a structured plan, you won't go anywhere. So it's really important that you also have a plan ahead before you actually go out and raise capital.
Okay, I would like to add a point here, and it's actually a counter question to you, Shrey, and maybe Samir would also like to add something to it. When we have an idea and we are very confident and we want to go ahead and, like you said, we don't want to shell out a percentage or sell our company. Right. But just because we have not raised a funding and we are shorted cash, the same idea gets copied and another competitor gets funding. What do we do in that stage? I mean, that's a fear of your competitor winning because they have more resources. How do you tackle that?
Absolutely. That's a very genuine fear, and it's a practical risk, to be honest. Now, there are multiple ways to attempt to tackle it, but there's no foolproof plan. The best way, I always believe in this, that whenever you're challenged, you should not compete, you should innovate. What I mean by that is, if somebody challenges, if you're playing chess, somebody becomes better than you at chess, start playing poker. I mean, play the game where you get to rule, or you have got the highest probability of winning. Winning or losing is an outcome, but when you're doing something, there has to be the intent, and the intent comes only when you can foresee what can happen. And you can foresee only once you start thinking intuitively as to, okay, if I'm doing this, what potential outcomes can this lead to? And there are instances where things might not work out, and it's okay. If you do not have access to capital, or you do not want to raise capital because of multiple reasons, it's okay to. The best idea is that you dominate a niche, and then you raise capital. So the niche comes only once you start innovating and differentiating. If you do a Me Too thing, the person, when you are trying to be the fattest player in a market where the fattest survives, the fattest is usually the one who has the most capital. So you're not going to survive there. So it's always better that you innovate there. That would be my answer.
Yeah, that answers my question.
I'll just
you want to add something to that, Mr. Samir?
Yeah, Deepmala. In fact, it's a very interesting question. A lot of these, startups that we interact with, they have this question, and the way they want to address is, hey, let's do an NDA, and then I tell them the annually around 3,000 to 4,000 pitch decks go to the VC, and I think let's say even half of it or even 10% comes to us. It's a big number, and you never have then the only once you're signing an NDA or at a professional corporate level, what happens is you're always running behind. Okay, what was the last thing? And you don't want the IB or the VC always want to. So that's never going to happen. And that's the problem with the industry right now. The numbers are so large that going into the legalities and all is going to be a very practical problem, right? So what does a startup do? Again, as Shrey said, we want to work towards the uniqueness. Okay. Firstly, if you're sending out anything, I always tell people send across a sanitized version of it, right? If there are certain key things to do your technology or the way you want to do your business or anything that you feel is sensitive, please do not send it across. It's your business, your plan. And if there is an interaction going to the next level, you can always program your talk in such a way or interactions in such a way that you could phase your information the way you want to send it across, right? But then again, if I talk from the investor side, isn't that the biggest problem that the investor also is looking at? Okay, how about having a business or a startup which is so vulnerable that I can just open up the product and copy it so easily? Okay, if that's going to be that easy of a problem, that's where a lot of startups would probably face the heat of the raising fund part of it. Because if it's going to be so easy to duplicate and copy, that is good. So again, as Shrey said, what you want to do is you want to work on your uniqueness. What's an IP around it? What can we do certain technology around it? Can it be something that can safeguard? It's not only the safeguarding the technology part of it, the business is happening. It's also safeguarding the investments. And further to it, I was just talking to a couple of the people today. I was talking to an air purifier company. We are doing great, and I said, so what is just giving an example, sharing along with you guys, and. They came up with, and then they came up with a model of the, where they purchase, procure, assemble, and sell. I said, great. So then that means if I purchase yours, can I open up and do the same thing? He said, yes, absolutely. So that is the answer to it, and you can't hide anything over here. It's a great startup in the health tech where air purification is happening, need of the hour, everything ticks the boxes. But from the investor point of view, does it take that most important that box, securing his investment and growth? I hope this example would really justify the question. So.
Very true. Yeah, this does. So, continuation to that, my next question to you, Samir, would be: let's say that we are looking for funding, and that's how every startup would want to go at some or other point of time. What are the different options of investments for startups, and what are their significance? Because many startups don't even know that what are the options we have, which ones of them are suitable for us. So they then start Googling and all. But from an intellectual point of view, what are the different suitable options for different startups?
Right. So again, very, very important question, Deepmala, that you pointed out, because understanding where I am, firstly, is more important. And then to this journey where I'm starting from, which is the right partner to choose, as Shrey has already earlier used this terminology, right? Okay. So again, first of all, if you're going through venture sort of a space or venture sort of invest, it's very important to identify, is your business scalable? Okay. Now, there's a very thin line to understand that, because when you are putting the investor comes in, he is coming with a bandwidth, he is coming with a limited, time frame in which he's expecting certain results, right? So let's say if it's a brick and mortar sort of a model, would a venture investor or venture fund, typically, which you see a lot of investment and scaling up happening, would he be the right partner as an investor? I'm talking from the from the startup point of view. Would he be the right partner to you, right? Again, I was just talking to another startup, and he had a brick and mortar sort of a model, and he said, I want to talk to some VCs, and could you help me out? And I said, firstly, what we want to resolve is, can we make this startup a scalable startup? Say there are certain issues that your scalability, and I give him certain instances of a couple of blocks that could happen, and he said yes. And I said, then what to do? Okay, let's wait for 6 months. Let's get back. Let's resolve the scalability issue, and then go to the venture part of it, right? If it is a normal startup, you can go with debt as a play. You can go with friends and family around as a startup that you can start off with, right? So this is just a little more of a security check before you go ahead and take your first step, right? Now, I'm just talking about the natural way in which the venture funding happens. Again, if you are a seed or ideation phase startup, which is you're thinking it's a brilliant idea, or you're working on a product, just started off, it's a seed, like below the ground thing. It's just not surfaced out, but you want to start off. It's just a startup. So there it's easy to start with friends and family because they trust you. Okay, they will trust you with your innovation, they will trust you with their money. And we know that if it's given to Shrey, Samir, Deepmala, it's not going to go anywhere else, right? Okay, it's going to go towards it, right? So we can start off with that. But once the money comes in, the attitude, the thought process is very important. Okay, it's somebody else's money. Every penny counts. You just can't, it's so much of a responsibility because it's a seed. The seed doesn't get what the nourishment they needed. The whole plant, forget it. That's where Shrey gave out a fantastic number that why would 80% or 70% of the startup don't make it, right? Because it's not only the idea, the whole, the whole atmosphere, the whole environment around it, which is so very important. Then we go on to, let's say you develop that, if the product is out, you want to go to the next level of, getting certain techs out or certain scale is what you are looking at. And that's where you have a lot of these venture funds, okay, who are ready to fund you from seed to early stage startups. So these are the terminologies so why am I using these terminologies? Because a lot of times the startup miss out understanding what the venture partner is trying to tell you, and this information is available on LinkedIn and a lot of these. So you'll see these words like a seed stage startup or a pre-seed stage startup or an early phase startup. So early phase startup is much more into the mature company that we look at. And then comes the series A, where your product is absolutely in place. You are still having some things, to be sorted out, but you are ready for that accelerator button. That's where the growth capital will come in. And that's where you see a lot of these series A. And you will see a lot of startups getting funded, but then the number starts reducing toward the series A level. Why did that happen? Because the capital is one thing, but then you have to sort out a lot of these things into the company to take it to that growth phase where it is pressing the pedal to grow. Now, what happens in the Series A? Usually I've seen you are present in multiple cities, you have a lot of traction, and then you are still looking at expanding. And then comes the Series B, where you are looking at absolute profitability and growth, maybe even overseas market. So again, if you chronologically, if you put it that way, again, so friends and family, you start off with, okay, there's one more thing, family offices. Now they are getting active. Okay, who is a family office? They don't have, usually a family office would not have more of a horizon to look at, but they are usually the long-term players, right? A VC is a firm where, again, there is a limited partner and a GP model, LPGP sort of a model where they are answerable to the investors. Okay, so when you are answerable, it's going to be a scrutiny to a level you cannot even imagine, right? So, friends and family to start off with, go on to angel investors. Angel investors are usually the guys who take the maximum risk. They would come in to bridge your gap between the seed and the bootstrap sort of a gap that you have. Then goes to, there are a lot of these funds which have come in as angel funds. Again, more organized way of looking at it. And if you have a very clear roadmap that you go to the VC, again, an angel fund would be an amazing, because then they not only come with the money part, but they also come with the connect, the ecosystem around it to help you, right? So again, capital is there. But I have seen, Deepmala, you won't believe, they invest in this space. They love the company, they love it. But then they feel that it's only the capital that I can give it to you. I cannot add a value to this vertical in what you're doing. So it'll be a pass for us. Okay, so don't get disheartened. These are the things and terminologies. It's not you, it's just that match that we are looking at making it happen. And throughout the area, you would have, a couple of investors, maybe 7, 8 to max out of the whole gimmick of the investors globally. So that's the number that you would go to. I hope it, was able to answer the question.
I do have personal experience of seeing startup, not personal experience, sorry, of seeing startups whose future or the company's future has completely changed because of the investors that they onboarded. And that was because the investor came with a set of skill which will actually enhance the company's growth, let's say marketing or branding. So that adds a lot of value apart from money and finance. So it does make sense to onboard the right kind of investor there.
Absolutely.
So continuation. Sorry, you're saying something?
We are taking the questions later, right, Deepmala?
Yeah. We will take the questions at the end.
So,
yes. There are very interesting questions coming up. Yeah, we'll take them at the end. Yeah.
Sure.
So, Shrey, continuation to that, I would like to ask, maybe this is not a very good question for a few of the investors, but this is a very important question for startups. Could you let us know a few important things to be aware of when looking for an investor?
Okay. Now, quite a lot of it, Samir answered in the previous question, along with the types of investors. So I would continue from there. Thank you, Samir, for seeding that. So what I would say is, like Samir said, it's not just capital. When you're looking for someone, don't just look for capital. Look for beyond capital, what they can add as value to your startup. And when I say more than capital, what do I mean is, what kind of mentoring can they provide you? What kind of strategic guidance can they provide you? How can they connect you to people in the industry that you are in, both on the demand side, supply side? How can they give you access to talent, the right talent that you would need? Now, key aspect of the startup thing is, or of any business to flourish, is to have the right people in the right place. Now, ideally, you would want to have right people in every right place, and a right place would be every place. But since we understand economics, the right places out here are the places where you have leverage positions, where you have somebody heading a department, somebody looking at some function which is really crucial to your business. Now, you got to have you should get investors who can get you access to all these things. Apart from this, maybe I'm jumping into the previous question, I'm not sure, but I would like to add something, which is that when I said there's smart money and there's foolish money, what smart people do in the beginning, foolish do in the end. Similarly, there is patient money and there's impatient money. Quite a lot of people think that, compounding, which is the ultimate aim of any investing, is an equation where the value of the final outcome depends a lot on the rate of return. I'm so sorry to say, it doesn't depend on the rate of return. It actually depends on the time horizon. Now, having said that, you should get people who are willing to give you the long rope and stand with you, not just sleep over it. Like they should be able to give you the right guidance. And only when you get such people should you go ahead and get yourself funded. So ultimately, it's more about how do you match your characteristics, how much in sync you are with the investor and this investor is with you, not at an expression level, but at the level of intent, where you really understand, you're clear, okay, this is okay, we are jumping together, kind of. I understand that doesn't happen 100%, but how much ever alignment you can get there, the better it would be. So it's not about money at all. Who can give you money at the best rate is not, if it's equity, what rate, or preferred share, or even debt, it's not the rate, it is the person. Once you have the person, maybe you can negotiate and pay that person a little extra. I mean, in terms of the value that you are giving, but always ensure that you get the right person onboarded. Like you also said that you have seen in your journey, the kind of investors people get, that itself changes the course of their the life of that startup. Now, this is an example that is there in history of history, mythology, anywhere you pick it. You don't need just capital. If it was only resources, if you go 2000 years back in the Indian history, you would see Dhananand ruling the country forever, but it did not happen. There was a man called Chanakya who trained a person who was literally nothing, a Chandragupta Maurya, and he groomed him so well that that person became quite something, and with next to zero resources. So it's not about just resources. It is about what comes with the resources. That's what makes all the difference. So I hope I've answered your question. Have I?
Yes. Very beautifully.
Thank you.
Okay. So now I would like to come to a question which might look simple and easy, but we never get enough of that, and always investors are interested to learn about it. Over to you, Samir. Key questions investors ask before investing in startup, for which a founder must be prepared over while pitching or preparing for the pitch. What are the questions they should be aware of and be prepared about?
Right. So again, I think the first interaction along with the startup starts from your pitch deck, or the initial information that you put it out across, right? So what is that the investor interested in? Firstly, what is the vertical? Is it a scalable startup? What sort of genre are you coming from? Number one. So if they are very set, okay, this is something, it's a B2B. So you will find a lot of these investors putting in their profile, okay, we are only and only looking at a B2B. Even if you are a brand, but we are looking at a B2B startup or a B2C startup, that means a business to business or a business to consumer startup, right? So these are the fine lines. First, you have to be really, really clarified, right? Because if you go there without, having that basic knowledge, again, it'll be a turn off for both the ends. Like we're not looking at any which ways matching up, right? So this is the number one thing. So firstly, what from an investor point of view, they are most of the investors today, they are entrepreneur first. So they want to know your background, they want to know where you come from, your qualifications, your ability to understand the vertical that you are. So you have a lot of people, surprisingly, but I have startups turned down by investors because they have no knowledge and background and they don't trust. It's like being a doctor, you are handling patients, but you don't have a medical degree. Now, how many people would figure it out and want to go to the doctor next time again? So these are certain things. So the pedigree itself, it's what they are starting off, with. Then your background, then your accolades, whatever you achieved out of it. That really, really says that okay, this guy is really somebody that I'm looking at the vertical, and this guy is somebody that you could head it, right? Second, I think the most important thing is what is the problem area that you are addressing. Okay, so once you have that problem area identified, what is the solution that you are providing? Is there an IP? Is there a differentiation factor against, a lot of things, right? So a lot of these, in fact, I come across a lot of these edtech, fintech startups that come across, and sometimes I for my assignments, I say no to them, but it is just an advisory that I go ahead with, but not take up the fundraise. The reason is, again, there's no differentiation factor compared to what we have seen. Now, if I can feel that, and when a VC or a startup, an investor who's looking at 3,000, 4,000 startups in a year, he's looking at it, he is he has to take decisions on those rounds, right? So again, the problem area, the solution, if it is winning, that's where your learnings would start. If you start getting a standard no or a standard reply from an investor, you need to really listen, learn, and change from that point. Okay, what's happening? What can I change, or what is happening? Is it just a check? It's not that you have to go into the self-guilt part that I'm not getting funded, but it's just that if everybody is saying the same thing, we need to really, really identify, getting that. And then you see the IP around it. What is the different factors that we are looking at? How big is the market? Again, because every time an investor comes in, is it a larger market that you're addressing to? Okay, there is no number to it. Okay, but in millions would be a great thing, because once you grow, that's where you want to see the number going higher and higher and higher, right? Okay, even if you're not going global, we have seen Zomatos and Swiggies of the world. They are huge success. So India itself is a big market. Again, going ahead, other things that they want to see besides your problem and solution part of it is, again, looking at the financial part of it. Okay, is there attraction present? Now, you would say, okay, I'm a startup, but now what's happening in the market is you have a total different breed of startups coming in. Total different breed. They are already at a mature stage, already having a traction phase already, and they are just looking for 1 or 2 crores. So 1 or 2 crores, you would say, okay, it's a seed, a very early stage startup, but then they are already having a revenue of 50 lakhs a crore. So sometimes investors have to take a call, okay, this startup needing 1 crore and other startup needing 1 crore, where do I put my money, right? So these are some of the things that then your go-to-market strategy, like how do you approach your, targets or what you have set across. And, these are some of the things that I feel an investor is really, really keen on looking at. And finally, if I give you the money, valuation is going to be a very, very crucial role. I know there are a lot of valuation models that people follow, but you know what? I always keep it an open to negotiation, open to talk about it. That is the best way to know what the other guy wants to know, because I know numbers. It's just a demand and supply that really, really determines the valuation. And the money which is given to you, how do you want to use it? Very, very important, because that shows your mindset and the preparedness the company is there to go to the next level. Back to you. I hope it answered comprehensively.
Yes, I would like to give an opportunity to Shrey also to add a few words to that.
I think Samir covered a lot of ground, and it was pretty informative. The only thing I would like to add, apart from what Samir covered, is on the USP part, or rather, we call it moat. Okay, if you ask any investor, he'll tell you, what is your competitive advantage? What is your sustainable competitive advantage? And or how do you plan to build it? In the first place, a startup might not have a sustainable competitive advantage. There was a question by Venkat in the chat box which said, can ideas have sustainable competitive advantage? Yes, very much. The ideas can have sustainable competitive advantage. And that is what smart people do. It's not how hard you swim. It is which pool you choose to swim in that makes all the difference. And hence, it's always wise that you have your sustainable competitive advantage or moat clearly defined, or how you're going to have it, how you're going to enhance it. And once you tell that to the investor, that is what is going to be have the maximum impact. And why sustainable competitive advantage? It's the moat that is going to protect your profitability once you have profitability in place. Now, if there's no protection around your profitability and anybody can come and take away the honey from the jar, then boss, the investor would consider that risky. And it's a fair thing. Anybody would say that it's a risky thing. And hence, a sustainable competitive advantage or a moat provides you with that lid on the jar, and that is something that people should really focus on, and not just do startups for the heck of doing startups, but actually think through your idea. Quite a lot of times you might need to innovate your idea. You might I would like to tell you one of the stories which I had from my college days, where I mentored one of my juniors who ended up opening Mukunda Foods. If you have heard, it's based out in Bangalore, and they make Dosa-matic, the dosa making machine. So this fellow got pissed off when he went to Delhi and ordered for dosa, and he did not get good quality dosa. And he said, and you're charging me 100 rupees for a plate of dosa. Now that pissed him off, and he, with that vengeance, he came back, and he was a mechanical engineer. He started building the dosa making machine, Dosa-matic. And it took him 2.5 odd years to come up with a viable solution. Now, once he had that in place, what his idea was? His idea was that I would open an outlet and I would open multiple outlets, and then that is how I'm going to capitalize on it. That is when a lot of people came in and said, one of his mentors suggested him that, this is not something that you should do. You should think about marketing the machine. That's your moat, and build an IP around it, like Samir was talking. And that is how Mukunda Foods became Mukunda Foods. So kudos to Vikas who did it. So that's to validate how a flip in business model can also be really important. So it's not that once you have thought something, it is going to remain static. It can be dynamic depending on how the situation unfolds. I hope that answers. That's my 2 cents to the question.
Thank you so much. The next question is again linked to it so that we continue. So now that startups have approached and they're talking to investors, what are some common mistakes that they can avoid while pitching to them? Can you just add few words on that?
Okay. So the first thing I would say is a startup should be very clear about what the idea is. Like Samir was talking, you should have your problem statement very clearly defined, and you should pitch it. You should not have a presentation longer than 30-35 minutes. Okay, 35 is a boundary line out. Okay, and actually you should be able to grab attention in the first few minutes, which is the first 5-7 minutes, not even 7 minutes, actually 5 minutes. And you do that by being as honest and genuine as you can be. And you're going to be genuine and honest only once you know your idea and you talk your idea exactly how it is. Keep your own introduction sharp but crisp, and go ahead and present whatever you have built as a structure, and how do you, and you got to address this part really crucially, which Samir also said, that you got to tell the investors that your presentation has to speak out loud to the investors that you're not building something for today. You're building something which is going to be hugely scalable. So scalability has to be the undertone. It does not need to be in the words. It has to be in the undertone of the whole presentation, that everything that I'm doing, and you actually need to do that to be able to genuinely present that like that. So those are key things that I would suggest anybody to do, and not be too attached to the idea. Remain detached from the idea, because you're presenting to an investor who is going to part with their money through some instrument or the other, and they're not looking at an idea like it's your baby. Okay, they are looking at an idea as if it is an investment opportunity. You can only pitch an idea well once you enter the shoes of the investor. You should ask yourself, what would an investor want, and provide that as candidly as possible to the investor in a very crisp manner, because people do not have a lot of time. Like Samir told you, a year, how many investment pitches do people receive? And that is how things work. So that would be my answer to this question.
Okay, so Samir, you want to add to that, because I'm sure you would have seen startups pitching, and there'll be a lot of common mistakes that you'd be observing, and there are few on top of your mind that you want to share with us.
Yeah, so I think there are common things which are there in the numbers and all that. I think what Shrey pointed out, being honest, I think are absolutely right about it, because you want to represent the right picture of the business to you. So be absolutely honest, because whatever information you're giving out, you are accountable for it tomorrow. You don't need to fake it to make it. It doesn't work when you're directly investor is not there to cheer, is not your cheerleader right now. So be very, very honest, number one. Number two, I think again, one of the common mistakes startups do is they start talking right away. The best way to do it, going on a call along with an investor, is be polite enough and let him initiate first. When he talks, one, again, it's a mark of respect. You're giving him the position to talk first. Second thing, when he says, it's like you can always ask him, how do you guys, how does a so-and-so fund invest, or how is your approach towards investments, or if you can tell me something about your fund or your investment company or something. So that's where he would really be appreciative and tell about what sort of a fund he is, where does he invest, your ticket sizes, the vertical. That would really form a platform for you to understand and curate your pitch to them accordingly. That is very important. And third, and a major small thing, but a major thing that I always look forward to founders doing, show some excitement when you're talking with the investor. You don't want a half an hour, 40 minutes where, as Shrey said, and the first couple of minutes are so important, but it's going so slow and dragging. And, it's like you yourself are not excited about your startup. How would he invest? Take that call on that another 30, 40 minutes. I think pretty much, you see me and Shrey, we're talking about it. We are there in the field as if we are feeling it, So that sort of, touch is what the investor is looking at, the first entrepreneur. Yeah, sure.
Great. So then an objective question related to this, which I would like to shoot to you only directly. For startups, what crucial information or documents an investor expects to be shared by the founders before the process demands a due diligence, before we move forward? Initially, what are the documents that needs to be prepared?
Okay, so I see a very standard approach by investors when it comes to documentation. Again, it starts very simple, having a pitch deck. Now, you would be surprised, a lot of people, the pitch deck itself is so very important of having your vision of the company very well placed. So I really appreciate people who are really taking that pain and going extra mile and getting a right pitch deck prepared so that the investor gets the right essence of it, right? Now, I remember meeting up so many people and trying to correct the pitch decks, suggesting upside out, slides up, down, everything, right? So that is very important. The crucial page, because if the pitch deck doesn't work, what is the use of the other documents going ahead? It will never come to that level. So pitch deck is going to be very important. Next, what I've seen investors look at is, again, once you have got the pitch deck ready, so the following questions, the following information that they usually ask is, if it's a technology, maybe a white paper, which is again in the public domain regarding your technology, that they want to really understand the technology. Because see, again, a lot of times you have an investment professional or a guy who is an analyst who is sitting right in front of you. He may or may not understand your technology, right? So again, a lot of time they don't get it, but it's your duty to explain it to the beautifully and a very simple layman matter. What is your technology about? So a white paper could follow up. Next, they would do, okay, fine, this is fine. This is something exciting. Let's look at what the technology does. So they might go into the numbers part of it. So a monthly MIS that you have in your company that you are maintaining of your revenues and expenses into a two core details of it. That is also something that is, they would look forward to. And any other thing, any other documentations. So again, when you're pitching for a pitch deck, if you have certain things where your accolades are there, your YouTube links are there, somewhere you've spoken about it, all this really helps in the initial phases. And then once again, the decision comes in, then everything related to the company, and you may be asked, maybe your qualification certificates, to your company incorporations, to everything. The due diligence part is a real thing. They would go to, probably before that, they would want to talk to your customers. So again, having that good rapport with your customers who would give you good references is going to be very crucial. So I have seen calls made, 30, 40 calls to different customers by VCs before going ahead. So these are the things that you be prepared for. But as Shrey said, what you need to focus is, if you're doing your business right, all these things are seamless, effect to your startup. I hope it answered the point.
Yes. So yes, this is a very crucial question, and you've answered them. I'm sure people always would be wondering, okay, what are the documents we should be preparing initially before the investor asks to us? So before even we pitch to them, we should prepare the basic questions and basic MIS reports, projection sheets, which should be a part of the deck. Some people like to keep it very short, and because they are skeptical whether these information are even required or it will be too much to disclose. So that's why I asked this question. My last question, so to both of you, would be, after that we will take up the questions which have come. Okay. So my next and last question for Samir, and Shrey can add to it later. in a situation where as a founder, you've put in a lot of time in preparing and you have, you sure your idea is great, but the investor turns you down and, you don't really get a good connection with the investor and you're not able to close a funding round. What should be the right approach of a founder?
You want me to go ahead, Deepala?
Yeah, Samir, you can continue and probably Shrey can add to it later.
Okay. So in fact, firstly, again, let me share some exciting. This year, again, let's start with an exciting note. 6 months itself, from January to June, the startup community has raised around $10 billion US. Okay. Now, what is more exciting is July itself, we've almost reached that mark of 10 billion in 6 months, 10 billion in July itself. Like the Flipkarts and Swiggies and all have come in. Okay. So it's huge, 20 billion right away in this year itself, and in 1 month, the 50% of it. Now the exciting number, I was just looking at how many startups got funded. Okay, the number was around 130. Okay, so 20 billion out of a huge market. So again, there is a capital involved. Yes, there is a capital available, right? As Robert Kiyosaki, I think one of the books I was reading, you don't need to raise capital. Capital is already there. Okay, the hard work is done. Okay, what you need to do is run your business. Number one. Okay, so even if somebody is saying no, there are n number of reasons to it. The journey is all about evolving as an entrepreneur, and these are maybe the up and down sides of it. Okay, I always talk to people. When I talk to startups, I ask them, what if you don't get funded? Okay, what would be the answer to it? Great, no, if I don't get funded, it doesn't matter, it's myself. I said, great, then you don't need to bother about it. Okay, don't worry about if the investor is coming or no. Even without him, can you run your business, or did you start your business just to get funded? Okay, the capital will come in. Okay, and this is one exciting comparison I tell you. Throughout your life of your company, you are always raising capital. 3 people that you raise capitals from. Number one, first is your customer. Okay, you raise capital because when you have product going out, you get money, money from there. If you are able to do that right, the investors anyway is going to give you the capital. Okay, so let's say if you're making a profitable venture and everything is happening, you're showing a good amount of traction, why would the investor not give you the capital? And third is your employees, your team. Okay, if you're not able to get 10 times of it, your business is really going to go down. That's a number. I mean, I'm not elaborating on it. So your customers, your investors, and your employees, these 3 people you're always, as a founder, making and raising funds from them. If you can do this and starting the first one right, there's no way the second one will not come in, right? But yes, there is a competitive and things which are happening. Yes, it is. Are people, the investors, evolving? Yes, they are, and a lot of times it's like I remember one I'm approaching a family office and fantastic startup. It goes, I know if they merge, it's going to be a fantastic thing. I approached them. I said, and they passed on the opportunity. I said, any reasons for that? Could you just share any feedback from that? I said, nothing, Samir. We had a pool of weekly and monthly, we have certain things that we do. And we have an IC meeting there. And out of the 10 shortlisted, you were there. But out of 10, we just had to choose 1 or 2. And you were there, not there. Your startup was not there in the card. So it doesn't mean it's wrong or anything. Let's get the attitude right. I am here to run my business to grow and scale. Investment is one part of it. It escalates to a level. If it is not, I want to see that. I do not want to react to it. I want to respond to it. I would end with that.
Okay, thank you, Samir. So let's hear from Shrey also on the same question.
I agree with what Samir said and completely agree with that you don't need to react, you need to respond, and it's okay if it doesn't happen. Take it in your stride and go ahead with the dance. Your main function is running the business. Do your karma right. Be conscious of if you're getting any recurring feedback. See if you need to actually flip things. If you genuinely think that yes, you need to flip things based on the feedbacks, you should flip things, but don't flip things just because the investor is telling you. Flip things because you know that the strategy is going to yield a long-term outcome that is going to be eventually in your favor. So don't be business focused. Don't just do things in a cosmetic way to attract the investor, and take it in the stride. If it happens, it happens. If it doesn't happen, it doesn't happen. And it's ultimately do your karma, and don't worry about the fruits. The fruits will eventually follow the day your karma goes right. That is what I would like to end at.
That's right. I think I also do agree with that, and I cannot have a better answer to the question which both of you have given. So I think this is end of my questions, and it's time to address audience questions. Maybe one or two might have been partially answered, but let's address them from the beginning. So Venkat asks, can an idea have a moat of entry barrier at the beginning so that competition will find it very hard to enter? This is for you, Shrey. I'll ask this to you.
Yes, that's a very good question, Venkat. And the whole idea is that you come up with an idea that is really, really good. And if you have your idea right, everything falls in place. Yes, there can be ideas where which have a potential moat embedded in them since the very beginning. And you can see multiple examples of such ideas from the business world, be it the public investing world, the private investing world. You've got plethora of examples where there are such things. Say, for example, if you are an SH Kelkar, which is into building fragrance, now please understand that building fragrance is a very, very key part of any product, any consumer product that goes out. And if you can establish yourself like that, that idea itself has a moat. Okay, so if you can do that, yes, that's wonderful. Similarly, in the whole ecosystem, if say we talk about pharmaceuticals, I'm not an expert in pharmaceuticals, but still I would like to tell you that you come up with, you think of a drug that is going to solve a problem or a disease that has never been even scratched. And if you succeed, that idea itself has a moat. That's an extreme example. You can come up with specialty chemicals which are not produced or which can substitute a certain specialty chemical. You can even come up with material where you can do this. Okay, the idea can give you a moat for certain years. That also, I mean, there are businesses like that as well. Say, for example, if you talk about prefabricated building material, we all know about brick and mortar being used for building. There was a wave which came in 2010, and there were some pioneers who came up and did prefabricated buildings. And one of them was Pennar Industries, a subsidiary of Pennar Industries, which is again a listed company, Pennar Pebs. And they are a listed company. They scaled from next to zero in revenue to 450, 500 plus. They were funded by Zypher Peacock, a private equity firm based in Bangalore. And I mean, that idea itself had a moat, because everybody wants the building to be up and running if it's a commercial one. And if you can get that up and running quickly using a material, using a technique, using certain material, and ensure that it lasts for 20, 25 years, you are reducing the turnaround time. And when you reduce the turnaround time, that itself is an advantage. That's an advantage that you get for a limited period of time. There are advantages that you can get for a longer period of time. So to answer your question, yes, and those are a few examples. And there are many more. Venkat, you yourself would be aware of many more.
Thank you, Shrey. I'd like to take one question from Mahesh. Does demand not play a role in investors' mind? Even though startup is offering similar services as incumbents, there can be large segments of market to be serviced. So this question goes to Samir. Does demand not play a role in investors' mind?
Absolutely, Mahesh. I think it's a brilliant question, and if I'm a layman, I'm just thinking of why not? Yeah, if it is rising tide. Why shouldn't I make some hay while the sun shines? But when you are in, so it depends on what type of investor are you talking to. Usually these people, are like, okay, fine. And as I mentioned about the air purifier company, right? Okay, so everybody is looking for oxygen or air purifier right now. They are making it happen. It's sorry, I was not an air purifier. I was an oxygen maker. So they made a oxygen generator, and everybody is so the biggest of the biggest guys are going to be into the Schindlers, and everybody are going to make it happen, right? What happens after that? Everybody gets it. Now, do you have that firepower? Is it so? As an investor, the demand is very important, yes, but how long the demand is going to last is also a very big question to answer. No, is it going to be a temporary 2 to 3 month time or 2 to 3 year time? And what is his bandwidth? And in that, if he sees everybody coming in, okay, what is the competitive advantage that his investments would make a 3x, 5x, 10x return? And at what level he comes in. So VCs usually shy away from. So as you see the bigger players coming in, they want a steady long-term return out of their investments because they would partly keep on exiting out of the companies. The initial ones are usually the tide part that they took at. So if your startup is again in that phase where 2-3 years is something that you will get those angel investments and all coming in. So there is going to be there's a market for everybody. But this is the differentiation factor or the mindset that the investor would look at from the point of view.
Okay, so one more question for you only. It's a very genuine question. How does an investor see a startup with no traction but promising competitive advantage?
Promising competitive advantage. Again, so as Shrey rightly mentioned, it could be a brilliant idea. It could be incubated. It could be a lot of things that could be done. There is no traction again. So, I'll give one example, so a lot of times you would have to understand how do I pace the whole business venture of mine. So I had a startup that I was talking to, brilliant technology, brilliant product. The team was 100 years plus into experience, right? They came, we were having conversations and they came to us, for fundraise. And then I saw a stream of, they're trying to perfect the product so much. The whole resources, the money, the angel investment, everything is going to the product. And there's no traction. Once they're 70-80% of the product was done, they want to go to the market. Okay. And then they figured out, okay, for this, there's hardly any traction right now. 6-8 months, there is hardly a traction. And what of the amount of money that is put in, right? So again, my approach is it depends from business model to business model, but to be as an investor, if you're having a product or a technology or an approach, which is going to be phase-wise, it is always good to start with a traction phase where you start, there is some revenue coming in, your go-to-market strategy could be certified, your business model could be certified, then you can see that next phase happening, So if you can balance between your product and your, your revenues, both to be looked at, because see, if you build, every resource has gone into the product, there's no traction happening. And the investor is also looking at, okay, fine, this is a very good product, but where is the traction? Can this team create a traction or market out of it? You would always listen to these phrases from an investor. You know what? It's great. I will keep a track of you. Let's get back to you after 6 months or 3 months. If there is a startup, how many of you all have heard this? And it's a frustrating answer. Okay. But that's where you are looking at, they are going to look at traction. And if you have no resources left to generate that traction, even if the investment doesn't come in, would you be able to survive? Is a big question. So it's all about approaching and understanding how do I want to run my company. And as an investor, I would always want to be careful. It's not that I have all the money and don't want to take the risk of investing in this startup itself. You want to analyze a lot of your options to be there. So both ways, yeah.
Thank you. Thank you for addressing that, Samir. So my next question from the audience would be to you, Shrey. It's from Ollivander. He says, is there any defined way to approach an investor? By that, he means, how do you actually approach an investor at the initial stage? How do you get in touch? LinkedIn, personal messages, direct messages? What would be the right approach?
I think
so that
Samir would tell you a lot from his experience. I think Samir should answer this.
Okay, no issues. Over to you, Samir.
Yeah, so again, no defined way to in fact, connect with a startup. But again, what I've seen is you can LinkedIn is a very good platform to connect along with. The whole world is around there. Almost everybody is there. So the different approach could be, again, you can directly message them or email it to them. A lot of these investors have their emails addresses mentioned in their profiles or have their contact details mentioned about them. Okay, so if that is not working out, sometimes it happens that you don't get that. You can always send in a connection request with a short note or a message to them that this is the purpose of your invite. If they get back to you, it's great. If not, great. Other thing what you can do besides that is, let's say if they're a part of a company or a VC fund, for say, a lot of these funds have their own websites that you can go back to, research out. They always have that contact details mentioned about that. You can go to the extent of just calling up, hey, I'm a startup in this venture. I got your number from your website. Want to know to a person who's there. This is a very, very bold way of doing it. Okay, but a lot of these times they have this email contact email ID also mentioned around it. Some of these venture funds have also matured out, and they have started having those Google forms or online forms that you can submit your pitch text to. Like the Chirate, Sonic, and all these guys are running the program there. So they have a fantastic designated team. They just click on the link and then you just fill in the details, and they have a fantastic turnaround time. So as the startups are evolving, so is the investment community, because the sheer numbers is what the next phase of growth is going to be taken care of. So this is, I think, the way you can do it. There are Twitters and all that, but frankly, I've not seen much respond if you directly tweet them that I need the investment, and so usually it's like if you go through a connect, it makes a lot of sense. You have other startups ecosystem you're well connected with. Do keep in touch with them. Do keep in touch with the investors that you're looking for. They would give you a feedback or a reference that you can go. References always work, and references, if you go through references, you get their personal numbers and a lot of other details to approach the startup. I hope I was able to answer that question.
Yes, pretty much. So let's see one question that I can put to Shrey, and probably that would be our last question because we are running short of time here. And I'm so happy that so many questions are flooding that we're actually running short of time, and probably we can address these in our upcoming next sessions. So Shrey, once you have an idea and pitch deck, who are the investors who back you for implementation? What kind of investors will back you for implementation based on that? You want to add to that?
That's a very interesting question. So what kind of an investor is going to back you? It's all about selecting the right investor who would back you. You don't just need someone who would put their money, but also put their experience and their contacts and everything put together with you. Only once the investor who would back you would be the person who would buy into your idea, not just at a money level, but at a level where they get involved to a degree that they feel like owners. Okay, you got to have investors who feel who don't think of themselves as investors, who think of themselves as owners, and you can feel it. It's something more to be felt when you interact with them, and the way to choose them is to get money from the right house. You come in the markets, especially in the public listed markets, people talk about where is the money coming from? Is it coming from kis ghar se paisa aa raha hai? That is what they say in Hindi. Okay, so it means from which house is the money coming from? Is it coming from the house, the intelligent house, the patient house, the long-term holding house? The only dimension that gets added in the private or startup listed space would be the dimension of is it coming from an investor who's going to actively mentor you, or from an investor who's just going to put the money and forget it. Now none of the investors are good or bad. Okay, it depends on what kind of an investor you want. A person who's good in themselves and can strategize, can execute. They don't need money from people who would actively get involved in their business. They want money from people who would be independent. So to answer that question, you would need investor who would mentor you, and to identify it is to look at their background, you have as much authority to ask for their background as much authority they have to ask about your background. So don't ever feel that you are the underdog in the whole negotiation. That's my boss taught me something which is very important. You can negotiate with anyone, and I completely believe in it. So that is how you go ahead and do it.
Great. Thank you. Thank you so much, Shrey. So last question that I would like to address in brief and then put it over to Samir is Yam says best platforms available to outreach investors. Well, we are in one of the platforms, DueDash, which is making startups investable. So these are the kind of platforms you can reach out to. And there's another question by Suresh, which is similar. Are there any public catalogs of investors or other resources available for startups to look forward to? So I'll leave it to you, Samir. You can answer that question. Both the questions are similar.
Correct. So are there things? I think there's a lot of data available on the the Googles and the specific ones. Besides that, again, if you're really specifically looking at I'm not sure if that would be that much helpful, but there are certain firms which have a dedicated data bank that you could pay them against for the data that you can reach out to, right? So venture intelligence or certain other firms are there, these are specific onto that. But again, I think DueDash, what you guys are doing, I think if people are here, I think DueDash has a fantastic, not only a international reach, but also it's the handholding. It's just not the data, but there's a lot of things around that these guys are trying to accomplish and spreading big time in India as well. So DueDash is something that you should partner along with, or at least focus around your queries. You could always, Michael's there, Deepmala there, these guys are well connected, help them. It never hurts asking, but people fail to ask, I feel, the right questions.
Very true. So I think we have overshot, but this was a very valuable session where we had a lot of questions coming and we had a lot of good questions curated for the audience. And I hope everyone enjoyed the session. And if Samir and Shrey, anything you both would like to add, you're free to do so, and then we would wrap it up.
I think I want Shrey to go on that. He's always been offering me the first platform. Shrey, please go ahead.
Thank you. So it was really interesting. It was an active discussion, and I really liked the kind of questions that we got. Also, the ones that we curated based on the research that we've done for the past few days or months, rather. And thankful to DueDash for arranging this. Thank you so much. That's all that I have.
Great.
Samir, from my end, so from my end, Deepmala, very similar things. But one thing I want everybody to go back. It's not, I know it's a difficult journey, but that's what entrepreneurship demands, right? So what I would say is very simple. If one can do it, you can do it too. If I can do it or if somebody else can do it, you can do it. There's nothing special about it. The only thing is just be open to listening, learning, and changing yourself. You should not be a problem to your own startup. Let me tell you, a lot of times the founders are so rigid to change. That's it, right? So this is something that really would change. And I'm 100% sure if you have an idea, like I was reading a book, very valid example and a very simple one. You don't need to teach a monkey how to jump. You don't need to teach a fish how to swim. You don't need to teach a human being how to dream. If you have a dream, dream big, it'll make it happen. And facts, when you have a dream, facts don't count. Don't worry about the numbers. You can make it happen.
Wow, that was awesome.
I would just like to add one more thing on that note. So entrepreneurs end up, I hope during our lifetime, we see the Indian ecosystem, the Indian public respecting entrepreneurs more than they respect heroes, the Bollywood actors or cricketers, which is what Mr. Kunal Shah, the founder of Cred, said. And I honestly hope that this happens. So on that note, that would be my last thing. that I got reminded of it when Samir was speaking about entrepreneurs.
Awesome. So I would request you guys to feel free to connect with the questions and answer session later on. Maybe these people who are our audience will reach out to you for the questions which remain unanswered. So you could address to them after the session. And that's the whole motive, that we can connect you guys with the startups who are in need of guidance and mentorship. So we invite them to have mutual connections and discuss further. And we have to wrap it up because of shortage of time. And I thank you once again. Thank you to both of you speakers. Thanks, Michael, for giving me this opportunity to host the event on DueDash as a city leader, and our wonderful audience who have been so active and participating in our session.
Thank you, Deepmala, for hosting it really well.
Welcome.
Thanks, Deepmala. First of all, again,